Welcome to the deep dive. Today, we're plunging right back into Bitcoin. It's really capturing global attention, isn't it? Especially now.
It really is. Finds itself at quite a crossroads.
Yeah, the market feels like it's consolidating. Almost like a tightly coiled spring, just waiting.
Precisely. What we're observing is this delicate equilibrium. You've got these powerful, sometimes conflicting forces really battling it out.
And the price action reflects that.
Absolutely. Over the last 24 hours, Bitcoin's price has been incredibly stable. Hovering between $115,000 and $116,000.
It feels calm on the surface.
Right. But that calm, it masks three, I think, critical underlying themes. There's this huge anticipation around macro decisions.
Okay.
Then there's accelerating institutional demand and also a pretty significant shift happening in the U.S. regulatory environment. More constructive, you could say.
Okay, so that's our mission today then.
Yeah.
To unpack these forces for you listening, what does this coiled market really mean? And what's driving Bitcoin now and maybe longer term?
Exactly. Let's get into it.
Okay, let's start with that narrow band. Bitcoin's been trading, well, almost holding its breath.
Mm-hmm.
Why so still? What are the technicals telling us?
Yeah, this stillness, this profound indecision, it's key right now. We're seeing widespread investor caution.
Mostly because of the Fed tomorrow?
Primarily, yes. That's the big event everyone's waiting for, the U.S. Federal Reserve interest rate decision. If you look at the numbers right now, Bitcoin's around, say, $115,681.
Pretty flat.
Very flat. Down just 0.36% over 24 hours. Volumes around $55.7 billion. Market cap $2.3 trillion.
And dominance. Still high.
Still quite high, yeah, around 59.24%. And the fear and greed index, still stuck right in neutral, 52 to 54.
So definitely not frenzied. More like a strategic pause.
Mm-hmm.
What does that look like technically?
That's a good way to put it. Technically, Bitcoin has formed what we call a symmetrical triangle pattern. You can see it on multiple time frames.
Okay, what does that signify?
It's a classic consolidation pattern. It visually represents contracting volatility, an equilibrium state, like a tug of war where neither side is winning yet. Exactly. The key thing is, this pattern usually resolves with a pretty significant price move, either a breakout upwards or a breakdown downwards. It implies a major move is coming.
So the market's waiting for a trigger.
It's waiting for that external catalyst.
That sounds like a technical tug of war then. What are the key levels for people to watch? Where's the line in the sand?
Right. So strong support seems to be established in that $110,000 to $114,000 range. A lot of people are calling that the safety net for bulls.
Okay. And on the upside?
Immediate resistance is near $117,100 to $117,500. But the really formidable barrier, both psychologically and technically, is $120,000.
Right. So a clean break above 120K could mean?
Could target $130,000 potentially. But on the flip side, a breakdown below that triangle support could see the price drop toward the next major support around $105,000.
And with all this technical weighting, what about the derivatives market? Are traders leaning one way, or is it just as cautious?
The derivatives market, it really tells the same story. Deliberate pausing, funding rates, the cost to hold leverage positions, they've cooled off quite a bit.
Meaning less risky leverage.
Exactly. The market isn't over-leveraged one way or the other. And look at the 24-hour long-short ratio, it's almost perfectly balanced. 50.05% long, 49.95% short.
Wow, dead even.
Pretty much. It suggests a healthy market, not one primed for a big leverage squeeze. So when the price does move, it's likely going to be driven by, fundamental perception shifts, not just technical unwinding.
Which brings us neatly to the elephant in the room, the Fed decision tomorrow, September 17th.
Yeah.
What's the overwhelming expectation here?
Well, the central narrative, the widespread expectation, is definitely for a 25 basis point interest rate cut, 0.25%.
And the market expects this?
Oh, yeah. Interest rate futures are pricing in something like a 91.8% probability for that cut. So the outcome itself is largely, priced in.
Meaning it's already factored into the current price.
Correct. So the real focus now shifts to the tone of the announcement. What does Fed Chair Jerome Powell say? What's the forward guidance? That's what will really move markets.
Okay, so if the cut itself is expected, what are the possible scenarios for Bitcoin right after the announcement, depending on that tone?
We see sort of three main possibilities playing out. First, the bullish case. Call it the dovish outcome.
Okay.
That's the expected 25 basis point cut, plus forward guidance suggesting the Fed is open to more easing later. That would boost liquidity, push capital into risk assets like Bitcoin, probably triggers a strong upward breakout.
Makes sense. What's the opposite?
The bearish case. A hawkish surprise. Maybe the Fed holds rates steady or they cut but come out with really stern warnings about inflation sticking around. Signals they're hesitant to ease more.
They would go against expectations.
Definitely. And it could lead to a rapid sell-off across risk assets as those speculative positions unwind. Bitcoin could potentially test $110,000, maybe even $105,000 in that scenario.
And the third possibility, you mentioned a nuance.
Right, the nuanced view. Let's call it the catch. Even if we get the rate cut tomorrow, longer-term treasury yields might stay elevated.
Why?
Persistent inflation worries, ongoing U.S. fiscal concerns. If those yields stay high, they offer a competing risk-free return. That could create headwinds for Bitcoin, dampening institutional appetite, even if the initial reaction was positive. A sort of medium-term drag.
It really sounds like Bitcoin is just deeply woven into the global macro fabric now, doesn't it?
Right.
Behaving much more like traditional risk assets.
That's such a crucial point. This integration, it's a double-edged sword.
How so?
Well, on one hand, Bitcoin gets access to these huge institutional capital pools that play the macro game. But on the other hand, it's now much more exposed to the volatility and the policy shifts of the traditional financial system.
So investors watching need a wider lens now.
Absolutely. You need that dual focus.
Yeah.
Keep an eye on the on-chain fundamentals, sure, but increasingly you have to understand macro policy too.
Okay, so while we're watching those immediate macro reactions, let's look underneath. You mentioned growing institutional demand. What does that structural demand look like on the ground?
This structural bit, it's fundamentally reshaping the market, I think. Look at the U.S. spot Bitcoin ETFs. They've seen this dramatic resurgence lately.
More inflows.
Big time. Another $259.9 million came in just on Monday, September 15th. That marks the 6th straight day of net inflows.
We haven't seen a streak like that since
Late August. And total inflows just over the past week, over $2.5 billion. One day last week hit nearly $760 million alone.
Wow. That's serious capital, not just retail playing around.
No, this isn't retail. Analysts are directly attributing these powerful flows to institutional investors, are positioning themselves ahead of that potential Fed rate cut. They want exposure.
Makes sense. And it's not just ETFs, right? You mentioned corporate treasuries, too.
That's right. That movement continues to pick up steam as well.
Any specific examples?
Yeah. Hyperscale Data, they're a publicly traded company. They just announced a $100 million Bitcoin treasury strategy. It's part of a bigger pivot they're making towards AI and digital assets. Their stock actually jumped on the news.
Interesting.
Any others? There are also reports about a Chinese Bitcoin treasury firm exploring a $500 million stock sale specifically to buy more Bitcoin.
So it's going global.
It seems to be. While maybe the initial, frenzy around treasury announcements has matured a bit, the trend itself is clearly expanding. It creates this sort of self-reinforcing cycle, a flywheel effect of structural demand.
Okay, moving from demand to another crucial area, regulation. For years, that uncertainty was a huge hurdle, wasn't it?
Yeah.
But you mentioned a constructive shift in the U.S. What's actually happening in D.C.?
Yeah, for a long time, regulation was the big question mark. Now there seems to be a real concerted legislative push to formally integrate Bitcoin into the U.S. national financial strategy.
How's that?
There's a bipartisan group of lawmakers pushing a bill called the Boosting Innovation, Technology, and Competitiveness Through Optimized Investment Nationwide Act. Mercifully, they shortened it to the Bitcoin Act.
Okay, catchy name. But what would the Bitcoin Act actually do if it passed?
It would be pretty transformative, actually. It would direct the U.S. Treasury to acquire 1 million Bitcoin.
1 million BTC.
1 million BTC over 5 years using budget-neutral strategies. The idea is to establish a national strategic reserve of Bitcoin, managed kind of like how the country manages its strategic gold reserve.
Wow, that's huge. Like official government endorsement.
It really is. And it builds on President Trump's earlier executive order about permanent government holdings of digital assets. It signals a major shift in how the U.S. might view Bitcoin's role.
That sounds like it would massively de-risk the asset class, especially for big conservative institutions. Who's pushing this forward right now?
Well, some prominent crypto executives are actually in D.C. today, Tuesday. People like Michael Saylor from MicroStrategy, Fred Thiel from Marathon Digital.
Heavy hitters.
Yeah. They're in a roundtable discussion with the bill's sponsors, Senator Cynthia Lummis and Representative Nick Begich, trying to help advance the legislation.
So, real momentum.
It seems so. And that legislative momentum, that's a huge factor for institutional risk and compliance departments. It could potentially unlock Trillions in conservative institutional capital that's been sitting on the sidelines.
Okay, fascinating. Let's broaden out for a second. Beyond Bitcoin itself, what's happening in the wider digital asset world that gives us context or maybe teaches some lessons?
Yeah, there's definitely relevant stuff happening. On the utility front, big news from PayPal.
Oh,
They just announced a new P2P service, PayPal Links. And soon it's going to integrate crypto. US users will be able to send Bitcoin, Ethereum, and PayPal's own stablecoin, PYUSD, right through the PayPal and Venmo apps.
that's massive for accessibility.
Free-
Millions of users.
Exactly. It dramatically expands crypto access, bridging that gap between traditional fintech and digital assets.
And what about innovation within the crypto space itself? Still moving fast.
Oh, absolutely. For example, Base, that's the Ethereum Layer 2 network incubated by Coinbase. They're reportedly beginning to explore launching their own native token.
Another layer 2 token.
Seems like it. Layer 2s are all about scaling blockchains, making them faster and cheaper. This move by Base just highlights that ongoing innovation race, especially among smart contract platforms. It could definitely spur new development, new capital rotation.
But it's not all smooth sailing, is it? We've seen some notable security incidents recently, too. Stark reminders of the risks involved.
Unfortunately, yes. Important reminders. Monero, XMR, the privacy coin, it suffered a significant 18-block reorganization attack.
What does it mean exactly?
It means a single mining pool managed to get over 51% of the network's computing power, its hash rate. And with that control, they were able to reverse about 117 transactions that were already confirmed.
Wow, that undermines the whole idea of blockchain immutability.
Yeah. It certainly does for that chain at that time. And there was another incident. The bridge connecting Ethereum to Shibarium, that's the layer 2 for Shiba Inu, it was compromised. Developers had to freeze millions of BONE tokens to contain the damage.
Okay, so these aren't Bitcoin incidents, but how do they relate back to our deep dive on Bitcoin? What's the connection?
Well, these kinds of security failures, even on other projects, they actually serve as pretty powerful real-time marketing for Bitcoin's core strengths.
How so?
Think about it. Bitcoin's unparalleled security and its genuine, robust decentralization. That Monero 51% attack. That's exactly the kind of thing Bitcoin's proof of work and massive hash rate are designed to prevent. It's incredibly difficult and expensive to pull off on Bitcoin.
So these failures elsewhere highlight Bitcoin's resilience.
Precisely. These events tend to drive a flight to quality within the digital asset space. They reinforce the narrative of Bitcoin as the most secure, the most reliable, the truly decentralized digital asset. It cements its position as the institutional-grade reserve asset for the whole ecosystem.
Okay, so pulling it all together then, what does this mean for you, the listener? We've got Bitcoin tightly coiled, waiting on the Fed, but underneath, there's this accelerating institutional adoption and potentially game-changing regulatory moves. It's complex.
It is complex, but the underlying direction seems, well, pretty clear. The immediate future, yes, the next 24 to 48 hours. Almost entirely dictated by what the Fed does and what Powell says, no doubt.
Short-term volatility likely.
Very likely. However, the long-term strategic implications of these other things we talked about, that institutional adoption flywheel, the potential U.S. strategic Bitcoin reserve, integration to PayPal, those are far more significant foundational shifts happening beneath the surface noise.
So for prudent investors, it sounds like you need to watch the macro signals for short-term timing and risk, absolutely. But the real story, the enduring driver of Bitcoin's long-term thesis, is that structural adoption and increasing regulatory clarity.
Well said. That seems to be the core dynamic right now.
Which leaves us with a question for you to think about. As Bitcoin gets more integrated into the global financial system, with these powerful traditional players driving adoption and regulation, does that fundamentally change what Bitcoin is? Or does it just amplify its reach as the most secure, decentralized digital asset we have?
Something to definitely mull over until our next deep dive.